There we go. Hi, everybody. Welcome to another Let's Crypto Deep Dive Thursday call. I'm so happy to see you all here because we have a very special guest today. Today, we have our good friend, Jonathan Angle, also known as Jangle. Most of us know Jangle from our days at learning yield farming from another group. And I spoke with Jangle, I don't know, a week or so ago, and we had a really nice conversation to catch up with what he's doing, and he's going to share that with us today. And let's see, like I said, I met Jangle. He was my coach. He was my yield farming coach way back when, several years ago. And so I learned a lot of what I use today from Jangle. He is definitely our Ethereum DeFi guy, decentralized finance for you new folks. So let's see, I will be recording this. It is recording now, and I will have the replay uploaded to my YouTube channel. I'll make sure I post the link to my channel everywhere so you guys will know how to find it. And I think that's all I have to say, and I'm going to turn the floor over to you. I keep wanting to call you JT Jangle. For some reason. Jangle. I haven't said the word jangle in so long. I got to get my mouth working to get Jangle. The floor is yours, and we're so excited to hear more about what you got going on.
Yeah, cool. For some reason, I guess the Hangout wants to put my real government state name on here, which is fine by me. But yeah, Jangle's what everybody calls me. Cool. Well, nice to see everybody. A lot of familiar faces and some new people. Thanks for the introduction, Kelly. I guess I'll start off by saying that anybody can throw any questions you want me to answer in chat as we go. I have kind of like a loose framework for what I want to talk about, just my thoughts on the majors, which I kind of view as Bitcoin, ETH, and Solana, cycle theory, and whether that makes sense or if it's anything to think about, and then kind of how my framework and thought process has evolved over the last couple of years in really especially like the last 12 months throughout this kind of bull cycle that we've had, and if that might be useful and some of the metrics I look at to evaluate DeFi and the direction we're going. But
can I interject you real quick, Jonathan, before Jangle, before you go any further? I'm going to ask people if you think about your questions, because we will have a full Q&A session at the end of this if Jangle's okay with that. So, I don't know, Jangle, how you like to do it. Do you mind being interrupted? Would you prefer people hold their questions till the end, put them in the chat or something like that?
Yeah, I mean, I guess we can think of it almost like a podcast or discussion, right? So I think that you're kind of familiar, and a lot of people here are familiar with some of the areas of interest that I have. And then as we go, if anybody has any questions, you can either like raise your hand or just I'll watch chat. You can just throw them in chat. And then that can kind of act as I don't want to do like death by 1,000, monologues over the course of the next however long we run for. So, just if you got anything you want to hit on or any questions, throw them in chat.
We were afraid we were going to have to ask you to dumb it down for us a little bit, because you might get into you're such a smart guy. And you are very knowledgeable when it comes to this decentralized finance stuff and finance in general. So just keep in mind that our old brains want to be able to keep up with you.
Yeah. Well, no problem. I'll keep it in mind. Can I share my screen? Is that something
Yeah, you should be able to. So if you see the little square down at the bottom with the up arrow, you should have permission to share your screen.
Boom. Okay, I'm going to share. And I do have like a couple slides on the side that it might flip over to, but I'm mainly going to use them as like just to make sure I don't forget any major points I'm trying to make. This is like my favorite website in all of DeFi. It's DefiLlama. It's got a bunch of basically like metrics on everything that's happening on every different blockchain, and yeah, it's totally free. So I'll throw that in chat. I'm sure a lot of you all are familiar with it, but if you're not, like, you could probably make that your home screen or like your new page for whenever you start up a new tab in your web browser, if you're like new or intermediate to DeFi, and it would be pretty helpful just to familiarize yourself with this website. Because I feel like a lot of people, like including myself, like in this industry, we're really prone to have a bias towards whether that be a certain chain that you really like or a certain segment that you think is going to take off. But you just have to constantly be checking that bias against like, okay, what's actually happening. And so if you can find ways to constantly be looking at some sort of quantitative metrics, then that's important. So let's see. The first thing I guess I'll highlight is if you go over here and you go to volumes, we'll start off with Dexes. And if you hit, daily or weekly or monthly right here, really, if you look at the weekly or monthly, you can kind of see a trend from, obviously early in 2020, there really wasn't anything in terms of Dex activity. And then even like during the peak of the bull market, I think you might, if you've been in crypto for a while, remember this week, like the couple weeks I think it was May 13th is when everything really went sideways. But like that liquidation cascade in the middle of the bull market in 2021 that brought Bitcoin from like 64K back to 29K and then back up to 64K and like during this span. So you see like that massive kind of liquidation event right here in that spike. And then really the key thing that I wanted to point out here is that we're in 2024 now. We're not quite 4 years off. We're really 3 years off. But the reason I bring up 2021 is because DeFi really did not exist during this period over here. End of 2020, you have DeFi summer. 2021, you have the kind of fourth manic year of the cycle. If you kind of subscribe to that sort of belief system. And then we're really already back at those levels. Like we've had some activity that even rivals the peak periods of sort of mania in 2021. So kind of the point I want to make, with this data point is that we've really seen on-chain activity in a lot of ways recover. And to like the 2021 mania highs. And that's not true with every sector, right? Like if you look at NFT volumes, those are down. Still, if you look at like GameFi, a lot of that is still down. But like DeFi for the most part is kind of at all-time highs, regardless of what metric you look at. This is another metric for derivatives volume. So on-chain perp volumes. And I have another little data point here. This is regarding, let me see. Well, I'll look at derivatives volume here. Derivatives volume is like far and away significantly higher than it was in 2021. It's really, if you remember, like on-chain perps, like I remember the rise of GMX in 2022, which we were pretty early on, pretty enthusiastic about and pretty big fans of. And some of the communities a lot of us were in previously about like yield farming opportunities around providing liquidity for on-chain perps. And since then you've seen major growth in that sector. And like it's important to highlight that Binance and even like Bybit and a lot of these Deribit for options, like a lot of these are some of the most profitable businesses in crypto, which is really, it's almost quite a shame that like Tether and Binance are some of the most successful businesses in crypto, and like they're really not the tokens that people are buying, right? It's unfortunate, but I do think that as time goes on, we'll see more and more volume go from off-chain to on-chain because of the lack of friction to accessing it. I know a lot of capital is in retail investors in the US that can't access places like Deribit or compliantly access on-chain or off-chain perps. And I think that this is a really profitable segment and a really high signal segment for the growth of DeFi, because at least when I want to trade, Jupiter and Hyperliquid are some of the perp dexes that I prefer. And occasionally GMX if it's like majors, but kind of the fee structure is really high there. So I honestly, like Hyperliquid has been the best perp experience that I've had on chain and or in general. And I don't do that too often, but I think it's really interesting to see how the growth has been very significant. I'm going to see if I can switch the tab that I'm sharing here and show. Yeah, here we go. And show this. If I go to all, this chart's pretty much up only. This last data point here is an incomplete data point, so you can kind of like ignore this little tail end, and like this is the last complete data point here. But this is the ratio of DEX to CEX, so decentralized exchange to centralized exchange spot volume over time, right? So you have it at 0% before DeFi summer, before Uniswap V2 and Curve and some of the original AMMs were launched back in the day. And it's pretty much on a steady path upward. And going from 13% is not really anything to sneeze at. When you look at the biggest business in crypto for the last 10 years has been exchanges, right? It's been derivatives and also spot exchanges, and derivatives are more significant than spot. But we're seeing the spot market become increasingly on chain now. We're not having price discovery on chain by and large. Those are happening. It's primarily happening on Binance and large centralized exchanges.
Quick question there, Jangle. So that chart you're showing illustrates that Dexes are getting more and more of the CEX's business. Just wanted to clarify that.
Yeah. So in 2019, of all the crypto that was traded spot, meaning buying Bitcoin or buying ETH or just swapping dollars or whatever for crypto, not any financial contracts or any derivatives, just spot regular crypto trades in 2019, 100% of that happened on centralized exchanges like Coinbase and Binance primarily. And now about 14% of that trading activity is happening on chain. So it's happening primarily on places like Uniswap, places like Aerodrome on Base, maybe places like Curve, PancakeSwap for Binance Smart Chain. Those are kind of the big spot players. But it's really like the trend I'm trying to highlight here is that it hasn't been that long. We're talking like 4 years really that it's the 4-year anniversary of DeFi summer pretty much, and Compound and AAVE becoming popular, and all the food coins being farmed in summer of 2020, and we've seen like quite a bit of market share of quite a significant part of the industry, the most profitable part of the industry, exchanges move on chain in spot, but now also within the last few years, really since like 2024 has been a major year. The last 12 months have been pretty major growth for on-chain derivatives, specifically these perp protocols, like Hyperliquid, Jupiter, GMX. You can see them on here. GMX I think was like a big leader in the beginning, and now has fallen off. Hyperliquid has seen massive growth, but right now, and I don't have the chart on this, but I believe that if you were to have this same chart right here, so comparing on-chain to off-chain trading, and you were to chart it for derivatives, which again is a significantly larger market than spot, just in terms of volume, because you've got like easy access to leverage and all that stuff. I think that the on-chain derivatives market is about 3% of the overall crypto derivatives, right? So
Wow.
Off-chain is much larger, right? We're in like this stage, like this early stage of derivatives moving on chain. And I think that we're going to see a chart that looks similar to this. So that's why it's kind of one of the sectors that I'm most interested in. And yeah, I think that this trend continues, right? Like I am confident that within the next 10 years we'll see this potentially flip or get very close to 50% on chain, and then there's kind of like a point where if you have price discovery on chain, then a bunch of cool stuff starts happening, right? Because right now, a lot of exchanges and financial products on chain are using oracles like Chainlink to look at off-chain data. And when you have price discovery happen naturally on chain, like that's cool. Yeah, so I think that as time goes on, more people will get, you know, sort of comfortable existing on chain. More applications will exist to make trading and settling on chain like easier, and we'll just in general see this trend continue. Yeah. And yeah, there's another metric here that I want to pull up and point out.
While you're pulling up another picture, let me just throw out some clarification for some of our newer folks that might not be able to keep up with some of the language. If I were to keep this really simple, I like perp dexes myself. That's one of the strategies that I teach at the Let's Crypto Mastermind and the Let's Crypto Knowledge Center. So if you didn't want to actually get involved with on the perp dex itself by providing liquidity, would it be okay, or would it be a good idea in your mind to then just buy the tokens of those dexes, like the GMX token, the Jupe token, or the, I forget what others you listed.
Hyperliquid.
Hyperliquid. They don't have a token, do they?
No, but they're doing a points program, and they probably, I think they will have a token. I think I have some of their points. I'm not sure like how many tokens I'm going to get, but I do want to point out, it's a good question. The answer is like, it depends. And it kind of gets me onto another topic that I think is like really interesting to think about, right? Which is like the difference between value creation and value capture. And then also, you know, looking at valuation, I just pulled up just the CoinGecko page for Jupiter here. Jupiter's at like a $7.8 billion valuation, which is like a lot. You know, I think they did something recently with you know, a governance proposal to burn some of the unallocated tokens, some of the tokens that hadn't been emitted yet. So I think, or something like that. But either way, on a fully diluted basis, they're valued at like $7.7 billion, which is like pretty insane. And then I have no idea what Hyperliquid is going to be valued at, but I'm sure it's huge.
Yes.
And then like, okay, let's look at something like Uniswap.
So you guys, if you're wondering what the hell he's talking about, if you if you wanted to buy some of the tokens within the narrative that Jangle believes in, he believes in the derivatives narrative, and I'm right there with him. I think it's going to grow huge. It has to, because that's what greedy people do in markets. Is the derivatives markets always explode. So if you want exposure to that without knowing how to do any of the derivatives trades or doing liquidity and all of that, you can go to Coinbase and you can find the Jupiter token that he's showing right there. I'm pretty sure that's available on Coinbase, but Jupiter, you know, is on the Solana blockchain. If you want to keep it even more simple, the GMX token that we were talking about, the GMX DEX, you can buy the GMX token on Coinbase. And Hyperliquid doesn't have one yet. They will. I don't know. Is AAVE fit in that group, Jangle?
So AAVE is a like a borrowing and lending protocol. So it's,
okay.
it's not necessarily a Perp Dex, but it is a big piece of DeFi. But like what I'm really trying to highlight here is that like it's very possible to have something that's a really good business, but makes a really bad investment because you buy it at the wrong price. And it's also possible for something to be like an all right business, but you buy it at like a really good price, and so it's like a really good investment. This is kind of like a framework or a mindset that's like really ubiquitous in TradFi, but is not very common in like on-chain investing. And you know, in TradFi, what we call narratives in on-chain and crypto world, in TradFi, they refer to as greater fool's theory, which is basically the idea that you're going to buy something because later on somebody else is going to also want to buy that thing. And the reason why they're going to want to buy that thing is because they think they're going to be able to sell it to somebody else for a higher price as well. So nobody really wants to own the thing. They're really buying the thing because they want to sell it later to somebody else at a higher price. In crypto, we call that, narrative trading, or, narrative investing, if you want to be a little generous. But in TradFi, it's referred to as greater fool theory, which is because you're always relying on a greater fool to come along and kind of buy your bags, which, I mean, I think is, it's a free country. You can kind of do whatever you want. But I think that, if you want to mitigate your risk, and what I find kind of just more of a compelling mindset to have is to like kind of have patience and try to find things that that could be valuable, and try to build some sort of framework for understanding why they're valuable, and why they'll continue to be valuable in the future, or get more valuable in the future, and then be able to buy them at like a really good price. So like it's possible that even though Jupiter could be a very, successful protocol, and they are like the biggest single piece of DeFi on Solana, which is like a major blockchain, it's possible that like there's just not a lot of upside, and there is a lot of potential downside in buying something at, a nearly $8 billion valuation, right? Like what's the hypothesis? Like, is it going to go to $80 billion? And
Yeah, how much further up can it go? Gotcha.
Yeah. So,
So
I mean,
it may not be
have,
good to buy Jupe right now, is what Jangle is saying.
if you believe, like, if you build a framework for thinking about it and say, okay, well, this is how much money it makes now. This is how many users it has now. This is the capacity for, Solana to grow, and how much volume it could be doing, and then how much value capture the Jupe token will have because of that. Like, if you build some sort of framework around it, and you understand what assumptions you have, and you can come to some sort of intrinsic valuation, and you think you're getting a good deal, like by all means, But I don't currently have that for Jupiter, and I the reason why is because it kind of instantly goes in my too expensive bucket when I just I look at it and I say, okay, it's $8 billion. Like for now, it's too expensive. But like let's contrast that. Like you brought up AAVE, and AAVE is a lending market, a borrowing and lending market, meaning you can go and deposit.
That's Kamino.
Yes, Kamino is essentially AAVE, but on Solana. So I was just kind of sticking in the Solana DeFi world here. Like Kamino is, and yeah, like not investment advice, not endorsing any particular protocol, or for you to make any particular investment decision. But like, if you look at this is the largest lending market on Solana. And if I just go back here to DefiLlama, the trusty DefiLlama, and I go to chains up here, and then I hit Solana.
We can't see your DefiLlama screen.
Sorry, let me switch it back over. Thanks. Yeah. So I just went up here to chains, and then I clicked on Solana that popped up over here. And if you're looking at these are all of this is like Solana TVL over the last however long. That was last cycle. Oh, we're bouncing around.
Yeah.
That's Solana TVL here. You can see it was super high, and then the Valley of Despair, sandbagging freed, blah, blah, blah. And then, we've recovered quite a bit here. Looking at the apps sorted by TVL, which is total value locked, basically how much value of stablecoins and crypto assets that are in the protocols. You have Kamino, which is number 2, right? And Jupiter, which is down here, number 4. Not to say that TVL inherently makes something valuable. It doesn't, but and they're totally different applications. Like I'm not trying to compare Kamino and Jupiter. I'm simply trying to point out that Kamino is a large protocol on Solana where you can deposit SOL or stable coins. You can borrow SOL or stable coins or other financial products, and they do make some money. They make money by capturing the spread between borrow and lending rates. So if I lend USDC and I make 8% lending that USDC out, and then they have somebody else on the other side borrow that same USDC, and they charge them 16%, right? The difference between their cost of paying the lender, and 16, their revenue, charging the borrower, they keep that 8% spread. Of course, there's not 100% utilization, but don't get too technical with it. But anyway, the fully diluted value of this is like 500 million, right? And then it's got a circulating value.
You're back to a screen we can't see.
Oh, yep. Switch back over to CoinGecko here. Circulating value of this is 70 million in the fully diluted value. So once you have all the token inflation, and you basically think of token inflation kind of like stock-based compensation, if you're familiar with valuing companies, the inflation that's coming, the dilution that is coming. Sometimes it's predictable, sometimes it's not, but just at a quick glance, this becomes something that, okay, maybe you want to do more research into. And just because, you have the possibility of, okay, well, this is the largest lending protocol on Solana. If we look at, a comparable sort of product like AAVE, what is AAVE valued at? AAVE is valued at $2 billion.
Wow.
So that's a, 4x difference, right? So and now I'm not saying you should make your entire investment thesis a comparable sort of valuation, but if, that might be an initial thought to say, okay, well, if you're somebody who has conviction that, Solana might have certain advantages that makes, Kamino have certain advantages over AAVE. Like, for example, AAVE has to launch on Ethereum, Arbitrum, Base, Optimism, blah, 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 blah. And, they launched 12 different versions of AAVE that exist. Oh, and by the way, there's like already 3 different versions of AAVE, and they're launching a V4, right? And then they have to replicate that across all these chains. That's fragments their whole user base and all their liquidity. Like, that causes some issues, right? Kamino doesn't have to deal with that because they build on a monolithic chain called Solana. So you can start to kind of build a thesis and then really dig into, okay, how much money does this make? And while we're kind of on this topic of value, one of the most valuable, according to the market, one of the most valuable DeFi applications up there with Jupiter. I actually did not realize that Jupiter had a higher FDV than Uniswap. That's pretty crazy. We are truly living in Solana's world now, I guess. But Uniswap has a fully diluted valuation of 5.8 billion, which, you might think like, okay, well, actually Uniswap's kind of a big deal though, right? Like, maybe that's worth looking into. I'm going to pull up another page here, just swap over. This is TokenTerminal. Throw this in chat. I like TokenTerminal. Doesn't have every single app on here. I like going to financial statements up here and then typing in popular protocols. If I type in Uni, you see they've got, or how about Uniswap? You see I've got Uni, the token. Then I got Uni, which is Uniswap Labs. And I'll click this little show definition over here. So some of these, this kind of looks like a bit like an income statement, right? You've got, let's switch over to quarterly just so we've got less information on here. You've got net deposits. This is how much TVL is on Uniswap. You've got volume. You've got fees, which is $120 million in fees. And you'll notice that there are also supply side fees. So this comes from, this is basically cost to Uniswap, right? So if you provide liquidity on Uniswap, which some of us have done, you earn fees. And so when you trade on Uniswap, you pay fees, and all of those fees are going to liquidity providers. They're not actually going to Uniswap, the token, right? And then on top of that, so Uniswap, the token makes zero money, right? But there is, maybe I have to switch over to Uniswap Labs over here. There is one way that Uni makes money, or at least Uniswap Labs makes money. And it actually just started, I think it was Q1, or maybe it was Q4 2023, but I think it was Q1 this year. They turned on a fee on their front end. So if you go to Uniswap, I think the URL is app.uniswap.org. Don't type that in and start making transactions. Confirm it before you start making any transactions on there. But if you go to their front end, they charge you a fee to swap. But if you use an aggregator like 1inch, or if you go directly to the smart contracts or whatever, if you don't use their front end, they don't charge you that fee. Anyway, all you got to really know is that they do charge a small fee now for some non-sophisticated users. It's very easy to avoid if you don't want to pay that fee. So if you're working with any kind of size or managing anybody else's money, you're going to avoid that fee. But if you're kind of new and you just go to uniswap.org and you're swapping $10, you'll pay the fee. It's like 25 basis points. And that's netting them, something like $30 million, like $100 million a year, right? But all of that money is not going to Uniswap, the token holders. It's going to Uniswap Labs,
Yes.
and the equity holders of Uniswap Labs. So you really have to be careful when you're following, because like right now, I think the DeFi narrative in the last week, everybody's very kind of bipolar about these about the different narratives or whatever. But in the last week, the DeFi narrative is picked up. But like, who really wants to own Uniswap? Like, maybe you have some sort of thesis that they're going to tell all the, the equity entity, the equity holders to shove it, and they're going to redirect all the revenues back to the token holders, and everybody's going to kumbaya. Maybe so. If you have a thesis around that, like, by all means. But like, it's important to realize that when you buy something on chain, you might be buying a pet rock, and if you don't really have a clear method of value capture for that thing, it's really hard to value it, right? Like,
yep. So bottom line is, if you're going to hold a crypto token long term, stick with the blue chips, because and even with the blue chips, I hear a lot of actual investment advisors in the crypto world always saying, don't hold your money in crypto for any length of time. Hold it long enough to make your money, get it out, sell it, get it out, and put it into something that is not so speculative. What do you think about that, Jangle?
Yeah. So, okay, let me switch my view over. I think it's a good point. Again, like, I guess the theme that, and maybe you could call it a reckoning, I don't know. The theme that I keep coming back to is like finding a way to come to an actual intrinsic value for whatever assets you hold. And then I wrote about this like a couple weeks ago, because the largest asset in the world, like the largest market cap asset in the world is gold, right? I mean, maybe I guess you could say real estate if you like lumped it all into one, but like it's the largest single sort of value asset in the world, I think, is gold. And gold, yeah, it's shiny, right? It looks cool, but like, it's not producing anything, right? Like, if I own shares in Coinbase, I know that they're like making sequencer revenues from base. Like, they have engineers that are like building things that are generating money, right? And they take that money and they're like, what do we do with this money? Like, oh, well, maybe we can hire more engineers, or we can like build this like node infrastructure and like sell it to developers, or like they're making money, and then they have like intelligent managers that are like taking that money and investing it to like generate more money. And like, that's good. I really like that. That's kind of what I want my money to be doing. I want it to be invested in like very like profitable enterprises that are like generating gobs and gobs of capital. And then like they have so many productive use cases to like deploy that capital into, that then generate really high returns on invested capital, right? So I think you can get that on chain, right? I do believe that it is possible to have businesses that operate on chain that, maybe don't have the conflict of interest between equity capital structures and like token capital structures. Like, I think that's possible. And in fact, like, I think as crypto continues to grow, and like the DeFi metrics that I covered in the beginning of this continue to level up, and more people with traditional financial backgrounds come into the industry, it will be the norm to look at on-chain digital assets with this sort of lens of like almost like the Buffett value investor approach, or at least not as much of the like degenerative trader approach, like more of the, I'm buying something of value. And yeah.
With that in mind, I'm actually developing my own fundamental analysis framework based on some trainings that I've done over the last year. I'm in the process of putting that together. I'm going to start out with just a basic checklist. And what you just said earlier is, how can we find those gems? How can we do an analysis to figure out all the little things you need to know to look at before you buy a crypto token, because they're so different from buying a stock or a bond or anything else. So I am putting together my own framework for doing fundamental analysis, which will be however many steps it ends up being. I don't know, 7 or 10 or 12. That will help people know where to go look for things like just the stuff you just now showed us. And that's just one piece. Because crypto is so speculative, you also have to consider the social piece. Is anybody paying attention to this new thing? It might be really good. It might do great things, but if it's not getting any notice in the crypto community, then there's a good chance it won't succeed financially. So yeah, putting together a framework is going to help a lot of people, I think.
Yeah. And I think that's true. Things need to get noticed. And I think that by having a really strong product market fit and by paying a lot of attention to your customer and like trying to build a real business like with good cash flows, you can get noticed in the space. But the thing is, like, most crypto users and investors and crypto Twitter participants are looking at just this onslaught of bullshit and just noise, right? Just absolute hype nonsense. And so we become really desensitized to it. And the people and the teams that are playing those sorts of like marketing games, right? Which everybody kind of has an immediate incentive to do. And for the most part, it's been very like profitable to focus on a marketing strategy that is about delivering on hype and focusing on marketing strategies that and even like not just marketing strategies, like actual business strategies of trying to pump metrics that like don't as much matter, right? And things like airdrops incentivizing non-sticky user behavior and non-sticky metrics and symbols and these sorts of things that make the protocol look better on paper, make it easier to spin up this sort of narrative. But like, why are you distributing 30% of your equity? Like, if you care about the token, if the token is really like the equity, if it's the capital structure of the entity, like, why are you distributing 30% to like people who are running bots, like clicking your thing a bunch of times? Like, that doesn't. So I think when more like traditional financial people come in, people who have investment banking experience, who have taken companies public and who know how to frame a story for a business and can advise the business on, okay, what metrics do you optimize for? Like, how do you make this attractive to actual capital allocators who are not sort of like short-term narrative traders? Because like at the end of the day, if you raise venture capital, like the venture capitalists have to return money to their LPs. They have to generate DPI, and they the people who I think are going to be the real buyers of a lot of these high FDV tokens, it might be retail, but are they just going to be playing hot potato with it? I think a big buyer ends up being large liquid funds who are managed by people with sort of TradFi experience that are taking this approach to looking at digital assets.
So bottom line, meme coins are going to go away. So if I were to summarize what you just said in a sentence, or two, I'd say meme coins on the way out and companies that actually make money on the way in.
Well, yeah, I think the latter is true. I think the former might be true. It might not be,
Unfortunately,
right?
it might not go away.
Yeah, I think you need to be careful with that. It's all about timing.
Yep.
And we've just have to remember this whole space is speculation,
Yes.
which is one tiny little space in the big world of finance. So this is why when you listen to the long-term holders and those kind of people, those big investment people, they buy Bitcoin, period. Because that's what a long-term investment looks like. It's proven itself for 15 years, hasn't been hacked, people understand what it's done. They have an association to another asset that is called gold, and they get that, and they understand how you can have a rock and give it value. So, oh, okay, I can do a digital rock and give it value. Like it's very specific. Soon as you walk away from that asset, you are in the Wild West. And what we are is a whole bunch of pre-IPO startup little businesses running around trying to get attention, just like the million of digital marketing applications. Every guy and his dog is trying to be a life coach. That's what these are, like a gazillion life coaches. And we just call them cryptocurrencies. So
yeah, 100%.
But it's timing, right? And there is value here, but we are still in huge experimentation mode. And until we have a really firm, standardized infrastructure, we won't know which things are the thing
Yeah, 100%.
that has the value.
So,
And we'll see the Microsofts and the Apple equivalents and that kind of thing in this space, but I don't think we're close there yet. So memes are still good for a while. They'll be good for this cycle.
So since Jangle, since your thing is DeFi, I would like to ask, because I see you brought up your Bitcoin ETF flow thing there. I don't want to completely lose the audience that is really new to crypto, because we have right now people on this call that are brand new, and people that have been at it for years, and people who are investment managers, I might say. Susan, I'm not exactly sure what's the appropriate title, but investment experts will say. So we have people that are really know a lot about it, and people that don't know anything. So if somebody on this call wanted to dip their toe into DeFi, what would be something you would recommend that's not a Bitcoin, that's not an ETF? I mean, I suppose that is a version of DeFi, but if you're retired and you don't have a 401k, let's say, and if you don't have an IRA, you're not going to get into a Bitcoin ETF either, would you?
No, I mean, I think that the ETFs are a great way to get exposure to the majors in traditional financial rails. But, if you want to go on chain, and, I encourage people to go on chain, maybe don't start with your, whole life savings or your retirement account or anything like that. But if you want to go on chain and start exploring, I highly encourage you to, and I think it can be really fun. It can be
most people here
really,
that are new don't know what on chain means, Jangle. They don't know what you mean when you say go on chain.
Okay, gotcha. So
I mean, some people don't have a clue what go on chain means here, and then probably maybe half to 2/3 do know. So
okay, well, I'll pull back up this and I'll switch the screen here just to help me illustrate the point. I spent a little bit of time on this screen before, right? This is the centralized exchange to decentralized exchange trading volume, right? So something that is off chain would be, well, let's start with the obvious thing, like, this iPhone right now is off chain, right? It lives in the physical world. It does not exist on any sort of blockchain, right? Now, if you're looking at financial products, like your bank is off chain, right? They have their own databases where they keep track of who has what money and who's paying who, right? And then your brokerage account, so like Charles Schwab or Fidelity or Vanguard, they're off chain. They have databases, right? And they connect their databases to folks at Wall Street, and they settle transactions in times like that are measured in days, and that sort of thing. And all of that is a series of IT systems and computers that exist in in the old world, you could say, but they exist not on blockchains, right? And then when you go on chain, what that means is basically you are using blockchains themselves. You're not using a business like Binance or Coinbase that is an off-chain entity that's allowing you to buy crypto, but you're actually taking that digital asset, that crypto asset, and you are moving it to a wallet that you control, an address that you control on a blockchain, and you are interacting with applications built with what we call smart contracts, which are basically just applications on a blockchain. So when we look at decentralized exchange to centralized exchange, spot trading volume, that means what percentage of trading volume is happening on an exchange that looks like an old world exchange. It looks like, it looks like Charles Schwab or something, right? It looks like a normal brokerage account, right? It matches buyers and sellers in an order book that happens in a database that I can't see, right? Or is not totally transparent to me. Maybe it's somewhat transparent, but it's happening on somebody else's database versus what's happening on the Ethereum blockchain, what's happening on the Solana blockchain, right? So I can send, Kelly $10 on Venmo. I can send her $10 in a wire transfer. I can send her a $10 ACH deposit, right? Those are all off chain. I can send, 10 USDC to Kelly.eth on the Ethereum network. That's on chain, right? So it's when you do some sort of activity, sometimes financial, sometimes not financial. There can be non-financial activities that exist on chain. And when you do that activity and it settles or in some way exists on a blockchain, that's what I mean by going on chain.
Yeah. Thank you. Is there any particular DeFi project that you really believe in right now? I mean, you've talked a lot about the ones where most of us who've been around a while are familiar with. Is there any DeFi projects that you think we should pay attention to?
Yeah, so it's kind of crazy that Solana has had such a great year, but I think it makes a lot of sense when you look at some of the trade-offs that I've been talking about for a long time, with Ethereum L2 roadmap. So I think that the easiest way to get a really good experience these days, if I had to suggest one place, it really is Solana.
Yeah, the Solana maxis are coming out. I think you're jumping ship from an ETH maxi to a Solana maxi.
You kind of asked me a very specific question, like if somebody's just getting started on chain and they're only want to look at one thing. I've really been thinking like the best single, or for me, my favorite single sort of DeFi product is Jupiter, not the perp trading. I mean, maybe you could that could be fun too, right? You can go trade perps on leverage or whatever, and that'd be a really entertaining way to get started.
It'd be an entertaining way to lose money. Stick with the JLP.
Yeah,
earn
exactly.
some money.
Those who have known me for a long time, or I've been talking about DeFi with for a while, know that I was like a really big fan, really all of 2022 and 2023 of a product called GLP, and this is a product called JLP. It's a similar product, but it's built by Jupiter, and it's basically a basket of crypto assets that includes about 44% Sol, about 10% ETH, about 11% wrapped Bitcoin, and then 26% USDC and 9% Tether. So it has a lot of exposure basically to Sol and other assets, but right now it's earning a 30% yield. Sometimes during periods of high volatility, that yield can get really high. I'll try to just explain it very shortly, and please don't just hear what I say and then yeet your entire life savings into this. I just think this is a really interesting sort of like on-chain product, so to explore, and it's something that I think can be very intellectually stimulating and help you, if you kind of dive into this, you can start to understand other things as well in DeFi. But basically, Jupiter is a place where you can trade perps, right? You can trade basically, you can go long or short with leverage, Sol, ETH, or Wrap Bitcoin, right? Pretty simple, pretty straightforward. Well, in order for that to happen, in order for users to be able to do that, they need some sort of counterparty. They need somebody to take the other side of the trade, and they pay that counterparty a fee. Usually, like they're pretty high, so you pay for leverage. You also pay to open the position, and you pay to close the position, and you pay a sort of like borrow rate, like every hour, I guess it ticks, right? So you're constantly, as long as your position is open, you're paying fees, and all those fees accumulate to the liquidity providers who's JLP. And I will point out that most users on Jupiter are long, meaning they are betting the market is going to go up, and that is true almost all the time by a lot, which means that yes, Jupiter has a lot of like price exposure, right? It has exposure to volatile assets, which is good when the market goes up, but it's bad when the market goes down, right? But since you are taking the other side of the trade for the traders on this platform, and they are always long, if the market drops, they lose money and they get liquidated. And so the liquidity holders make money, which practically in most situations, right? It's important to understand black swan events and like long tail possibilities, but like in most market conditions, what happens is if the price of crypto is going up, then the price of JLP will go up, usually a little bit less. If the price of crypto is going down, then JLP will go down less or stay flat, or sometimes even march up a little bit because people are getting liquidated so much. So it's like a really volatility muted is how I would say it, position. And if I look at, I'm just going to pull up another screen here.
So if somebody wanted to get into, I'm going to try to summarize briefly here. For people who don't know what we're really talking about, in crypto, the money has to be made available from somewhere. In the regular TradFi world, the U.S. government will say, prints all the money and makes it available for us to do things with. In crypto, all of us individual users have to make our money available for other people if they want to trade it. And the way we do that is we deposit our money, our crypto, onto these platforms like JLP and Jupiter over there that Jangle was just showing us. We deposit our money, let them trade and do all the crazy stuff they're going to do. And when they lose money, we get paid some of what some of the money they lose in their trades. We get paid that in the form of fees. So liquidity provider is what we all want to do. In my world, we want to provide our money as liquidity to these platforms that do all this trading, and we earn fees. It's a lower risk strategy, and it's one of the ones that I teach heavily in the Let's Crypto world.
Yeah, and there are certainly market conditions where this can go against you, right? So it's important to understand all that. You know, the most sort of notable market condition where this can be a bad idea is, you know, and we saw this last cycle in GLP, but it ended up not materializing terribly. But it is a risk that the market goes down and then traders flip short. So the market's going down and the traders are short, and so you're losing money because you have exposure to assets that are going down, and you're also losing money because the traders are making money, and that causes like a big hit to happen. But that really hasn't materialized because traders are generally always long, and sometimes they flip short, but it's usually for a short period of time. And usually when perp traders are net short, you see the market go up and they all get liquidated. It's actually a crazy phenomenon. If you back test it, it's pretty nuts how wrong perp traders are in aggregate almost all the time. But yeah, so this is the price of that liquidity providing position over the last 8 months or so against the dollar, right? And then useful to view that against Sol as well. And each one of these candles is 3 days. So you can see that, you know, Sol's had a crazy run from January to now, and JLP is like doing well against it, flat against Sol. But when you measure the volatility and the risk of holding the asset on a risk adjusted basis, it's actually like outperforming Sol, which has been one of the best performing assets of the year. So that's just an interesting financial product that exists on chain. I also, I do think that it's, Base and Arbitrum have wonderful protocols as well. It's really useful just to go to this site, DefiLlama. I mean, if you're new to DeFi, then literally just spend 10, 15 minutes a day on DefiLlama. You can go to overview and you can look at this is the largest TVL application in all of the on-chain world, right? Not just DeFi, like crypto, right? Anything where you're building with smart contracts on chain. This is Lido. What's that? Category liquid staking. What does that mean? Click on it and start to Google stuff and ask around and
join the Let's Crypto Mastermind, and we'll start teaching you about this stuff. I'm curious, Jangle, what your take is on GMX versus the JLP, the GMX V2 positions, which are my other favorites. Do you have an opinion on that? Or you followed that at all, and how it compares to the JLP Perp Dex?
Yeah, it's a pretty similar design in terms of the Perp Dex. There's some nuance differences, but in general, you have this big liquidity pool that's the counterparty to perp traders. They pay fees, and the chart looks similar. The makeup of assets is, it's weighted a little bit differently, and that sort of thing. But also, GMX has their GM pools, which are basically
what I'm asking about. The V2 is their GM pools.
Yeah, I mean, I think it's a fine evolution for GMX, but in the long term, 5+ years, and you can even kind of see it manifesting now with the growth of Hyperliquid and other things. Like if we go to volume and then go to perps,
Hyperliquid,
which I'm already on. Hyperliquid's number one, right? And I think that Rabbit's grown a lot, Vertex has grown a lot. I think
they got some stiff competition, don't they now?
Yeah, and I'm not sure building the app on one. Granted, Arbitrum's a great chain with a lot of DeFi on it. I don't think building the app on one chain and having individual liquidity pools for each pair is the solution that's going to win. I mean, I have nothing against the product or the team or anything like that, but it just seems like the approach that Hyperliquid is taking with more of an off-chain order book. Like Hyperliquid's kind of built their own chain, right? Like their own app chain. Same with DYDX, like their own app chain. Jupiter has not, but the reason why Jupiter I think is so successful is one, because it's on Solana, and two, because the flow of traders on Solana using Jupiter, it's not sophisticated flow, right? It's people who are already on Solana because they're trading meme coins. I'm making a generalization, but I think this is generally true. They're on Solana, they're trading meme coins, they're doing Solana things that are, usually more retail degen stuff. And, I don't think they're hedging out exposure to other liquidity farming positions or anything. I think that they're just levered long Sol, right? Or levered long ETH or levered long Bitcoin. They're using Jupiter to do it. So Jupiter takes a different approach. They're building on a chain. They're not building their own app chain, but they are building on Solana, which has this monolithic a design approach, which is different than building on Arbitrum, where the kind of express roadmap of Ethereum and L2s and Arbitrum is to sort of pull things apart, and that means that for apps like GMX and for apps like AAVE and for apps like Uniswap, you get fragmented liquidity, which I think really hamstrings the growth of some of the DeFi applications. And unfortunately, but and there might be solutions to that, right? There might be interoperability standards, and there might be ways to reduce that fragmentation. But yeah, right now, I think that the sort of order book design, just in general, like an order book approach to derivatives is probably better. And like the way that's being achieved by things like Hyperliquid and DYDX is like having their own standalone chain.
So that's awesome. This is a good conversation. I'm wondering if you heard that Hyperliquid is getting ready to launch Hyperlend. So they're about to become a lending platform as well, lending and borrowing platform. So another place to do some looping.
Yeah, like possibly. I did see that. It could be worth it if you get like points or whatever, and you do get allocations. I think that Hyperliquid probably has a high FDV whenever it launches, and I don't know the incentive structure of the team. I think it's always important to look at, okay, what is the team incentivized to do? Like, do they have equity? Do they have tokens? And you can kind of deduce, okay, what's the capital structure and the value capture sort of mechanism going to look like? Because it's usually going to align with the team incentives. So I haven't figured out all that, but yeah, I think if that's all good, then Hyperliquid has the potential to be a really like valuable on-chain business and on-chain asset. Yeah, so it's another vertical, right? I mean,
yeah,
Jupiter is a DEX aggregator. Like Jupiter is first and foremost, at least in my mind, first and foremost a DEX aggregator. And so like you go to Jupiter as a way to swap, and then they just route you the best liquidity, sort of like 1inch, right? And I think that as time goes on, we'll see kind of more value. And this is a really important point. I know that we're over an hour in, but this is like a really important point that I think is a trend that everybody should monitor, is that, you know, value can actually be captured, I think, and probably will more so be captured by the applications that users are used to going to, right? So we've seen Uniswap capture over $100 million in like annualized fees from a front end fee, right? Totally avoidable, 25 basis points just to use uniswap.org. You can swap with Uniswap in 100 other ways and just totally not pay that fee. But users are just used to going to Uniswap. And so they make over $100 million a year, right? So there's value to be captured in owning the user, right? And I don't think that in 5 years, the user will predominantly be owned by Solana, or the user will be owned by Base, or the user will be owned by Arbitrum. The user is going to be owned by the application, right? The user is going to have an application on their phone or go to it on their computer, and then we're going to figure out whether it's Coinbase's smart wallets, whether it's like the wallet abstraction, you have like single sign-on or whatever. The user is going to interact with. There'll be power users who still operate like us with these old school type wallets that have their seed phrases and everything. But for the most part, if there are really good apps that people want to use, they're gonna go to those apps and they're gonna use those apps, and they're not gonna know which L2 it settles on and what the interoperability protocol is and what it uses for data availability and all this sort of stuff, right? So yeah, I think that what's really important is the user experience of using some of these apps. And in that case, I think like Hyperliquid is doing a really good job. Jupiter is doing a really good job because people are so used to going to Jupiter to swap, right? So Jupiter is able to charge higher fees on perps and still experience massive growth because they own the user, right? So yeah, I just think that's a really important point.
Well, this has been a really good introduction to all the knowledge Jangle holds up in that brain of his. I'd like to just shift a little bit and do some Q&A. And then I am going to, you guys, in case, just so you know, before this call is over, I'm going to get Jangle to talk a little bit about himself and what he's been up to and where he's going. But for right now, let's continue on with some DeFi talk and see if anybody has some questions. Philippe, I know you had one that you had put in the chat there. You asked about Avalanche. Do you want to, or not Avalanche, Trader Joe? So whoops. Oh, you just stopped sharing. So I'll just throw in some questions I saw in the chat. Philippe, you were talking earlier about, I don't even remember exactly what you were talking about, but is Trader Joe going to do anything, I guess, as a trading platform? Maybe that's what you were thinking of, Philippe, because Trader Joe does the concentrated liquidity and all that. And then I wanted to add to that, how is the Avalanche chain doing in relation to Solana, and Arbitrum and all those are a little different. Avalanche is a layer one. To me, Avalanche is a layer one that also acts as a layer two. It's kind of both. And we're not hearing a lot about it lately. And the reason I want to bring it up and get your take, Jonathan, or John, I'll just call you Jonathan sometime.
Either one, yeah.
Because that is your name. The reason I want to bring this up is one of our other good friends from one of the groups that we used to belong to, Zach, they are talking a lot about AVAX. And, I kind of hear about it through the grapevine, if you will. And I kind of want to know what you think about it in relation to all the other things you've shared today.
Yeah, so I think that it's important to point out like difference in philosophy. Like Zach, I think is a much better like trader than I am, right? Like he looks at like technicals on charts a lot. And I also think he's probably more involved in the Avalanche community than I am. So maybe he knows things that I don't, but like from a purely technological perspective, I think that you're right that I guess if you're trying to look at it in a traditional framework of L1s and L2s, where exactly does Avalanche fall? And I think that for a long time we looked at, okay, there is the monolithic approach where you have one blockchain with as much beefy, computers pushing through as much throughput and low latency as possible. And like the poster child of that is Solana, right? And then you have this modular approach where you're going to try to take all of the functions of what you have to do to build on-chain applications, like all the infrastructure, and you just like break them apart and you try to scale that way, and by like piecing them all these different components together. And that's the modular approach, and that's kind of what Ethereum has been doing, right? Mm-hmm. And then there is like the sort of like app chain approach that you're going to have a different application or a different chain for every single application, and every application is going to own their own chain. They'll be able to adjust the parameters exactly how they want to, and then they'll handle everything, but it'll be sort of like, or most things, and it'll be for every application you'll have your own chain. That's like the app chain thesis, and
that's Cosmos.
That's traditionally associated with the Cosmos ecosystem. And then, you saw Avalanche really get popular in 2021 and, get really put on the map in a big way. It existed before then, but get really put on the map in a big way, attract a lot of big DeFi protocols, a lot of TVL. And I think their approach is more, I guess you could more align it with the app chain thesis, but also, mainly I think the reason for that is giving different applications that run their own networks the ability to adjust those parameters, but not sort of leaving them to run all of the infrastructure and have as much responsibility as you would traditionally think of an app chain in like the Cosmos ecosystem. So I really don't think it fits in any of the three main sort of categories of how you look at infrastructure very cleanly. But these are all just kind of a lot of people, kind of me included, think that over time all of these design philosophies are like converging and melding into one overall design philosophy, as they all kind of fix the problems with each of their approaches and copy each other, what works well and what doesn't. So yeah, as far as like AVAX the asset, let me look at the valuation of it. It's a fully diluted value of like 10 billion. So okay, can you justify 10 billion fully diluted valuation for AVAX? Like, okay, this is my approach, right? And somebody who is a technical trader is not going to have the same approach. But the way I look at anything, like, is it something I want to, own, is is okay. Does its valuation, does its intrinsic value justify itself with its cash flows? And you might think, well, Bitcoin doesn't have any cash flows. ETH doesn't have any cash flows. Well, it does, but not anywhere near enough to justify its valuation. Gold doesn't have any cash flows. You're totally right. And I think that this is the big reason why ETH has been underperforming. I haven't been following the AVAX BTC ratio, but looking at the price of AVAX, if I were to guess, the AVAX BTC ratio is not that great. It might be worse than the ETH BTC ratio. I don't know on the year. Maybe it depends on the time frame, but it might be better. I don't know, but I think that it's probably struggling with some of the things, right, that ETH has been struggling with that Bitcoin has not been, right? I think that Bitcoin, maybe this is true short term, maybe it's true for 10 years, maybe it's true for 10,000 years. I don't know, but I think that for right now, the market looks at Bitcoin as a special snowflake, right? Bitcoin is like gold. The whole digital gold thing has really held for Bitcoin, and you can see it in the ETF flows when you compare it to ETH. You can see it like Bitcoin has just, it's got the brand recognition. It's right near all-time highs, at the moment, or 20% off all-time highs or whatever. And despite, you could say there's no smart contracts on it. It has, these sort of technical limitations about throughput. Like it really is like kind of like a generation behind a lot of other blockchains in terms of usefulness and performance. But like gold's not very useful, and as jewelry, and maybe you need it for something, I don't know, but like it's not like $17.5 trillion useful. Like it's not that useful, right? So a lot of its valuation is coming from the consensus that this is what you buy to protect your purchasing power. I'm in Southeast Asia right now. I'm in Vietnam, and I was just having dinner a couple nights ago with a local family in the area I'm in Da Nang, Vietnam, and they were talking about how they save in gold, how everybody saves in gold, how a funny cultural thing, the women in the family keep all the money and they don't tell the men where it is. They hide the money from their husbands, and they said that about 80% of families in Vietnam do that. That's what they said. I'm not sure if that's necessarily true, but they said their son had kept about 200 million dong in a bank that shut down, and then the government, I guess, doesn't bail out banks, so he lost, I think it's like $8,000, which is a ton of money for this part of the world. And he said they were like, we told him, his mom was smart, always keep your money in gold. You get money, you buy gold. That's what you do, and because gold goes up, right? And so I asked them, it's like, have you guys ever heard of Bitcoin? They're like, we hate, Bitcoin boo. Like, not because I don't think they've had a bad experience with it, but I think that they know that it's volatile. And that's Bitcoin, right? Like that's our boomer gold rock, right? Yeah. I think that more so, it's true with other assets that, if you are a, person interested in.
Oh, we just lost your sound there, Jangle. Something died, battery died or something. So I want to interject another question here for you, Jangle, and I'm going to maybe throw you a little bit of a curveball. And then if somebody else has a question, jump in, type it in the chat, raise your hand, whatever you want to do. Just don't be afraid to jump in. But I've been starting to pay attention. I'm going to shift gears a little bit, Jangle, and this may throw you a curveball. And if you like, I don't know anything about that subject, feel free to just say so. I've been starting to pay more attention to XRP because I'm very interested in what's going on with the BRICS. I'm very interested in trying to figure out what's going on in the financial world outside of the US. The piece about XRP that I want to bring up to you right now is because several times you've mentioned gold. And there's a huge part of the XRP army, as they're called, community, that truly believes XRP is going to be backed by gold someday. And I personally think that that's bullshit. But I'm going to say it online here because there's only a handful of us here. I won't say it in front of the XRP army lest they show up at my doorstep.
Oh, bring it on.
Well, you come join me and then bring it on. So I did recently read several articles that a gold company, Meld, please correct me if I'm wrong, I think that's what they're called. They're working with XRP to now create a gold-backed stablecoin to be deployed on the XRP-L blockchain. And if all this that's going on in the world about, get rid of the dollars, we want to buy our oil with some other currency besides the dollar, and if the BRICS get their way, and there's this new financial system where local countries have to trade, are going to trade for oil in a centralized currency, I'll call it. Let's say it's that stable coin that is being created on the XRP-L ledger. And if XRP, I don't know if XRP is required as gas fee or something similar. I'm just wondering if XRP is a diamond in the rough because of what's going on in the rest of the world and this new stable coin.
Okay. It's my audio. My audio is probably lower quality now, but you can hear me. Okay.
Yeah. Yeah,
okay.
We can hear you.
So gold exists on TradFi rails, right? There is gold ETFs, or at least like the big one, GLD. Dollars exist on TradFi rails, obviously. Dollars exist on blockchains, right? So you have USDC, you have USDT. Gold exists on blockchains as well, like PaxG, and I think that's the big one. There's probably, I think maybe Tether has one. I don't know. They should if they don't. Maybe Circle will have one if they don't already have one already, right? So that part of the thesis, I think, is like correct. And I think that, in fact, like that thesis of gold on chain, dollars on chain, everything on chain, like soon that is like going to be, if it's not already, like totally consensus amongst even people who own no Bitcoin, no ETH, no Sol. Like I'm getting to the point where, I'm very certain that basically the next 10 years of financial innovation technologically is going to be hot swapping a lot of the back end of TradFi for blockchains. Like, in fact, like this, I started my career in a Big Four consulting firm where all my clients, especially my major clients, were large financial institutions, like Fortune 500, Fortune 100 financial institutions. And like I was working with their IT systems and like doing their like risk analysis and risk consulting for their IT systems, and like was flabbergasted at the IT systems that were like literally older than me, like considerably older than me. Like
that's not saying much in case you guys don't know. He's in his 20s.
So yeah, I mean, like 60s, 70s, 80s, like these are old, like, because they're systems that run financial infrastructure, and then like were built to like upgrade financial infrastructure into the digital age, like in the beginning of the digital age, and then they just like kind of weren't good enough, and they're very critical, and downtime is very expensive, or if they break and malfunction, it's very expensive, so they're just never updated, right? And in software, there's this concept called technical debt, which is like basically drag that is produced on your productivity by the poor design decisions or just the rushed design.
Bring this back to XRP, will you, Jangle?
Oh, sorry.
You're off in left field now.
Sorry, yeah. So basically, I think the crypto is going to update a lot of the technical debt of the financial system. So the question is like XRP. So XRP's got a 56 billion.
In relation to what's coming, it's not what it's doing now. It's in relation to, what you may know stuff we don't know. That's why I wanted to ask the question. This idea of gold-backed digital currencies, not CBDCs. CBDCs are fiat-backed.
Tokenized gold. Yeah, tokenized gold.
Sure. Well, yes, tokenized gold, but not like buying PaxG. PaxG, you buy one PaxG, it's like buying 1 ounce of gold. That's not what a stable coin backed by gold is. At least that's my understanding. That a stable coin backed by gold is, I'm going to think of it in terms of dollars. You have a dollar stable coin. That dollar is backed by gold somewhere. So it has value, not this this $1 of USDC is backed by $1 of fiat that ain't worth shit being
But if
held
it's
in
pegged
some
to
bank.
$1, then, you know, if there's inflation, if the dollar is debased, then your asset, which is somebody else's liability, is still dollar denominated, which is fine. But like, I think that if you're going to have a dollar denominated like instrument, then you probably are going to want to like collateralize that with dollars. And if you're going to have like a gold backed instrument, then you're going to want to collateralize that with gold. I think generally, that's probably the most straightforward approach. And I do think that, you know, we've obviously seen the proliferation of tokenized dollars. We're going to continue to see the proliferation of tokenized gold. Will we see like stable coins backed by gold? I don't know. Like Tether has part of their treasury.
Ripple has already announced their partnership with Meld, which is a gold company, that they are producing a gold-backed stable coin. I'm trying to figure out what that means exactly, because tokenized gold to me means something different. Like you said, PAX-G is a crypto token that represents 1 ounce of gold. Therefore, gold right now is $2,500. So one PAX-G token is worth $2,500. But a stable coin backed by gold, I don't know what currency we would use to denote it in. I'm using dollars because that's all I know.
It could just be like Tether has, according to their audits, they have various collateral backing the USDT, and part of that is precious metals, right? So part of it's Bitcoin miners, part of it's Bitcoin. It's mostly bonds. It's mostly, you know, treasury bills and bonds and some corporate bonds and all that sort of stuff. But you know, the vast majority of it's dollar denominated type fixed income instruments. Anyway, XRP. XRP itself, right? Like, so I'm very confident you'll have all these sorts of different financial products, including tokenized gold, including other things that might be backed by gold that are denominated another way on chain. Like you can make, I think a good way to think about them is like flat tokens, right? So they're not denominated in dollars. They're not denominated in gold. They're like denominated in like hamburgers and barrels of oil,
like
stuff, right? Like that's like you create your own CPI and you collateralize it with a bunch of like those will exist probably. Like there's gonna be a bunch of different stabs at it, right? The question about XRP is not like gold or whatever. It's like, is that going to be the ledger where people build smart contract applications, where they settle value, where they is it going to be part of this ecosystem? And like the evidence so far is like no. And if there is activity, meaningful activity that like happens on there, there's also the evidence or the question of like value capture. And you said like, oh, well, you'll need XRP to like do this thing. It's like, well, nobody wants to hold XRP. It's like, okay, maybe a few people do, but like
it wouldn't be people, it would be between institutions. So
institutions are not going to allocate meaningful amounts of capital to XRP at a $56 billion valuation. Like there's no reason to do that when you have
pause for a second, Jangle.
The reason, other blockchains.
Pause for one second.
Cheaply.
The reason they would do that is because if they want to trade if they want to buy oil, all right, let me try to keep it simple. The idea is that XRP becomes a middleman. So if Russia wants to trade with China, Russia has rubles or whatever, and China has yuans, they can't talk to each other. So Russia trades their rubles for XRP. XRP gets transferred to China, and in China, those XRPs get converted back into yuans. So the XRP system really is only being looked at on a large scale as an institutional middleman. If that happens and they have to use XRP, then these banks and other institutions would have to buy XRP in order to make that transaction I just mentioned. And if so, the little guys, us retailers, could potentially profit from, you know, some boom in XRP if all these institutions around the world end up having to trade the way I just described.
Yeah. So what you're kind of describing is like a international like payments network, sort of like SWIFT, but because China and Russia are like a bit adversarial, to the US in some ways, like, or how are they going to do it? Like the answer is like they have this infrastructure to do this. Like China and Russia like do trade and settle on their own sort of like financial infrastructure. China has what's called I think it's called the cross-border interbank payment system, like the KIPS or whatever. And then Russia has another one. A quick Google was like the Russian system for international transfer of financial messages, whatever acronym that would be. But like, yeah, you're right. Like, it's just probably going to get updated, right? And there's probably faster ways to do it and settle it. And like, blockchains offer a very meaningful advance in technology that make a bunch of things possible and more efficient that otherwise wouldn't be. The obvious thing would, for me would be like, they're probably going to do that where there's the most liquidity. They're probably going to do that like where there's the highest security, and then maybe where they can obfuscate it and like have privacy as well. And like, I just don't think that XRP is going to be where they do that. And like, I especially don't think that they're going to want to buy a bunch of like the native asset. Like I think that there are meaningful questions around the whole industry right now of, are these L1s going to be able to really capture value and go up in price? And I think the only L1 that is the special snowflake right now and is Bitcoin, right? And the reason why it's capturing value is because it's the special snowflake that's like digital gold. I think that obviously, like, there's been a lot of discussions in the Ethereum community about can ETH even capture value, and ETH has like tens of billions of dollars of like very sticky liquidity on it, and it has like many different teams building lots of infrastructure on it, and like the Ethereum community is like at a real philosophical like fork in the road right now. It's like figuring out how do we make sure ETH stays valuable, and like XRP really just does not have a lot of those big advantages and big moats that Ethereum and then Solana also have. And so it's like really, I think, an uphill battle. It's like really an uphill battle for XRP, and that's reflected in the price performance against Bitcoin and against the dollar and against ETH and against Solana. Yeah.
Yeah, thanks. I just wanted to hear your take because I don't think anything's going to happen with XRP anytime soon. But if all these things, come to fruition that I just mentioned and other things, I kept it really simple example. In 10 years, I'm kind of curious to see what might happen because I always like to be on the cutting edge of what hasn't happened yet. So thank you for sharing your thoughts on it. Does anybody else have any questions about crypto and stuff that you want to ask Jangle before I ask him some more personal questions?
I don't have a question, but I think to the point that you're making, I think a lot of these platform coins that we've been speculating on could turn into just functional things that have no value in and of themselves. And XRP is an excellent example of that. If its whole purpose is just as an exchange to allow other currencies that do have value to transfer, they actually don't want the XRP to have its own value because that just muddies the waters of that transaction. Yeah. And so it will be held to zero value in and of itself and will be only a tool. And and I can see Ethereum, I can see where Ethereum and some of these others could run into that same problem as things mature, because they are so down at the bottom. Like we don't really trade on the cables that keep everything networked together. We need them, but that's not where the value is held anymore. The value is held in the many layers of applications that sit on top of the cables. So I think you're right. I think this was a transitional phase and they had value early in speculation. But I think as we go farther along down the road, a lot of the original things will actually lose their value. And I just want to make a comment about Solana as well. So it's very interesting, and it comes from your conversation, Jangle, that if I'm putting an app into an Ethereum environment, I now have to make this app work across many things. And so we have two choices here. We can standardize everything that's on Ethereum, or we just go somewhere else and start over with all the lessons that we learned through our Ethereum experience, and we call that thing Solana. And that's why everybody's there, because it is sort of that next generation and doesn't have to deal with all that stuff. And you'll be curious to see when we sort of get through the experimental phase, whenever that is, whether that becomes the Microsoft or the Amazon that on the other side, when we actually go, okay, this is what the right path looks like. This is what standardization for the world looks like. Maybe it's Solana, maybe it's something else altogether, but it probably is indicative that we are moving away from those original products, and those teams, they're going to suffer. It makes us, we really have to think about whether we want to hold lots and lots of this stuff that was in that first first decade, that first 2 decades of this asset class. Yeah,
all the
originals.
There are real questions about value capture for all the L1 assets. I think Solana is going to have the same questions. And I think that this happened in the early stages of the internet as well. Like the hardware companies made money, right? Like the hardware companies made some money, but like the big value capture of the internet was like search and social networking and like video hosting and like these applications. The applications, and they own the users. Like I'm scared to think about like how often I go to youtube.com or open the YouTube app like on an average day in my life. Like YouTube kind of owns me, right? And like I don't pay attention really much to, you know, what the infrastructure that makes it all possible along the way is. There's like no value capture hardly anywhere else besides Google monetizing my eyeballs with YouTube. And so it's entirely possible that as a thesis we are like totally right on the idea that this is going to be, you know, very technology that enables a lot of upgrades and new use cases and like drives efficiencies and creates tons of value. And like we're totally right on the vision, and like we buy Netscape, right? Like that's possible, right? So and in fact, like it's likely, which is why I think that it's really important to kind of shift to that mindset that I brought up in kind of the first half, which is looking at which businesses are making money and capturing value for their shareholders, whether that be getting an equity position in that company or getting an on-chain, you know, token position in that company, if and only if that token is a similar structure and like fiduciary responsibility or something like that. There's going to be some sort of value capture from the token holders, and I think that we'll get regulation hopefully in the future that allows us to have something like an equity structure that exists wholly on chain, and that will open the doors for that use case. And critically, like in 1999, 2000, 2001, like you did see a lot of speculative mania. You saw a ton of malinvestment and a ton of just sort of people jumping on narratives and greater fool theory and all that stuff. But if in 2001 you said, okay, that was crazy, I'm not going to bet on that speculative mania happening again, right? I'm not going to just buy things because we're going to have another internet cycle, right? I'm going to look at the companies that have real moats, that have a real product market fit, that have really sharp management teams that are focusing on generating cash and finding product market fit on the internet. You would have had to do a lot of work and wade through a lot of noise, but you would have had many years to catch Amazon. Like if you just did that, you didn't have to find it right away, right? You could have found Amazon in 2002, 2007, 2009, 2012. Like you just had to believe in conviction in the overall internet thesis, and then have a diligent and not blow your money buying the bad stuff, right? Just have a fundamentals driven approach. I think that's exactly where we are. That you can maybe we'll see another cycle or whatever. But if you are, well, I won't say you, I don't want to give any investment advice. If the approach I think that is prudent is really a fundamentals driven approach and not as much just banking and betting the farm on the next kind of wave of greater fools theory, which, you know, we'll probably get, you know, history doesn't repeat, but it often rhymes. But, you know, that's the approach that I think is going to be the best, in my opinion.
Yeah. So
I agree. And I think just to make one comment back to what you said early on, Kelly, that with that in mind, when this cycle ends, you should be out of the crypto stuff because you have gotten its value for the cycle. And now we go back to cash and wait to see what comes next.
That is the number one lesson.
Did that? Yeah.
That's the number one lesson I got out of this cycle is don't hold past the cycle. Yeah. So we're winding down.
Unless you're buying Amazon, right? Like if there or Apple, right? Right. But Bitcoin doesn't produce any profit, right? Bitcoin doesn't actually produce any productivity. Like the reason why Amazon has had such incredible gains, or Microsoft or Apple or Google, like the reason why any of these, you know, big major tech companies have performed so well is because they've had excellent management teams that have focused on like delivering solutions and finding product market fit and making gobs and gobs of money and then reinvesting that money into productive employees or productive just investments in general. And so and critically, like what's really important to realize is that like your market timing doesn't matter if you're buying the right asset, right? Like if you're buying something that's really, really, really valuable and really good, like you know, you want to make sure that you're not, you know, overpaying. But even if you're overpaying, like if you're buying the right thing, like you're gonna do great, right? The important thing is recognizing what is the really good stuff that has really good value accrual and and buying that, right? If you believe in the thesis and that it's like as significant or on par with something sort of like the internet and has the ability to produce those sorts of cash flows.
That's the $1 million question everybody's trying to answer. What is going to be that big, the big diamond in the rough, the next Amazon, the next Google, the next Apple in crypto? So we're going to keep our ears to the grindstone and maybe together we'll all figure that out. And with that in mind, Jangle, I'm wondering, are you going to continue with your Substack, and are you going to maybe do some version of a Jangle DeFi report going forward?
Are you talking about the DeFi report with Michael Nadal? Is that his last name?
I get a lot of newsletters, and I know one is called the DeFi report, but you kind of call yourself
I
DeFi.
love that guy.
Yeah. There's a lot of good ones, believe me, and I can't keep up with all the reading. But I'm just wondering if you're going to come up with your own, call it whatever you want, the Jangle report.
Yeah. I mean, I've been publishing on Mondays. I'm going to keep publishing on Mondays. And please reply to if you get the emails, or if you see it on the Substack app, drop a comment and reply and let me know what you want. I'll throw the Substack in chat.
Yeah, there you go.
Because it is, for some reason, I can get on a call like this and just bang, talk about, everything up and down, and the conversation flows really easy. When you sit in front of a computer and there's a blank notepad, you're like, what will I write about in DeFi today? So
yeah. So if somebody wanted to make sure they get your Substack reports that you come out with every Monday, where do they go to sign up for that? Just to that link you just shared?
Yeah, to that link I just shared. So DefiJangle.substack.com.
So Tammy, you just click on that link and you'll get to Jangle Substack, and there's a button. He'll have a button in there somewhere that says, join now or something like that. Isn't there, Jangle? Because I have a Substack too. I haven't used it for a few years, but it's pretty easy if you go to that link that we just put in the chat.
Yeah, it should prompt you to put in your email, so you can just put in your email and you'll get the emails every Monday, and then you can look at all the previous posts and that sort of thing. Substack really likes asking people to pay me money, but you can just put in your email and subscribe for free. You don't have to pay anything, and you'll get all the.
So
they make a cut of revenue, so they really like their creators to make money, but it's all free.
It's really cool about Substack is it's free to use, and they don't charge anything for it, but if you do make money, they want a percentage of it, and it's actually a very reasonable percent as well. I think I'm going to go back just using Substack for my newsletter that I'll probably put out right now. I'm thinking about doing it every quarter so that I don't overwhelm myself, but I really love Substack. So that's one question I wanted to ask you. Are you gonna, I'm just gonna call it the Jangle Report. I think that's a really cool name personally.
Yeah, sure.
And then Philippe was asking earlier, how long are you staying over there in Vietnam, and what in the heck got you to go to that part of the world in the first place?
Oh man, well, so probably for a while, but not just Vietnam, also Singapore. Very soon I'll be in Singapore and Malaysia. And what got me out here, I think, was the fact that, my girlfriend and I are both traveling out here. We were at a period in our lives where she had just kind of left a big four corporate job, and, we weren't tied to a traditional like US based schedule. Like I said, I started this call, like I'm on the opposite time of Central Time in the US. I'm 12 hours ahead of Central Time in the US. So 11 hours ahead of New York time. It was like super inconvenient. Like I'd never be able to live here if I was working like a regular remote job. So both of us figured like, hey, let's go to the one place that's like most inconvenient to travel to for people who are based in the US, because like we're by weekend right now. And then, we can go to South America, like whenever, right? Like South America is pretty much the same time zones as the US. So like going to, and we had done that, before, and spent time in like Mexico and Colombia and all that stuff. So, yeah, we figured like, hey, like this time around, let's spend pretty much most of this year in Asia, because we can. And then I'm actually so excited about, and I'm surprised I went this long without mentioning it. I am going to a place called the Network School. So I'll link ns.com in chat. Some of you might remember Balaji Srinivasan. He was the CTO of Coinbase for a while. And he also was that guy who made the bet that Bitcoin was going to be $1 million when all the banks were collapsing in 2023. And I think that was mostly a PR move. Obviously, unfortunately, Bitcoin did not go to $1 million in the 2 or 3 months that he had hoped it would. But yeah, he's basically he wrote a book called The Network State, and he is looking at blockchains as, obviously CTO of Coinbase, so a lot of experience in the crypto world. Blockchains not just as like a finance tool, but a human coordination tool, right? So how do you build a better society using incentives that you design on blockchains, using smart contracts as legal structures, using and just coordinating talent across the globe using blockchains. And the idea is to like basically build a community of sort of like-minded, technology-forward individuals, and get them together in person, and build eventually a society that is recognized on an international level as a legal state. So that's kind of the goal, and to start it from a blockchain network. So there's lots of like kind of crypto utopian, like libertarian values to get in. There was like an application process, and you had to kind of disclose some of your like worldviews and philosophies, like to make sure you're a good culture fit. Is like, how do you feel about Karl Marx? Like, how do you feel about capitalism? Like these sort of questions you had to rate on the scale and everything. So anyway, that's for 90 days. They purchased an island, or I guess an area of an island just off the coast, about 30 minutes from Singapore. And so I'll be going there in a few weeks. I'll be going there for probably 90 days, as long as it doesn't suck. So until basically Christmas, I'll be there.
Doing what? Yeah, I want to go.
Yeah, so he's actually got a Substack as well, where you can read about it. You can apply, and this is just the first iteration. So there's like more. Hopefully we improve it, and we.
I can't go. I still haven't gotten my damn passport. I'm so bad about getting this darn passport thing done.
It's pretty easy.
Yeah, well,
Boom. There's the post. You can read all about it.
Okay. I will be.
Yeah.
I'll make sure that I keep the chat. The chat will get printed out. It gets printed out along with the video, so I will include that. Figure out how to put that in the description of the YouTube video somehow. Just copy and paste.
It looks like you can go virtually too. Like it'd be way cool to go in person, but there's a remote ticket as well. Looks like.
Oh, good. Yeah. Check it out for
Yeah.
sure.
Yeah.
And there's, every day, I guess the philosophy is learn, burn, and earn. So every day you wake up, and they've got this like all the the roadmap for like the tech CEOs is like make a bunch of money, get super into living forever. So it's like finding longevity hacks. And I guess the number one longevity hack is like exercise and like sleep and diet. So it's like you wake up in the morning and there's like group workouts, and then there are different basically like learning paths for the day, and you can do one of them or all of them or whatever. And then there's like competitions like $1,000 a day for bounties for building software or creating content or whatever that I guess furthers the sort of initiatives of the network state. That's my understanding. I'm not there yet, but I'm excited to continue. Maybe I'll make some YouTube videos about it, but definitely
you should.
At minimum the Monday Substack will continue. But yeah, I'm sure I'll be talking all about that.
So Tammy just asked would you be in the Japan area in a couple of weeks, and Tammy Jangle just said he would be on this remote island somewhere in about 2 weeks, and he'll be there for about 90 days, learning all about this guy's philosophy about crypto and the new utopia that they're developing. I'm going to go check that out and find out what they're doing, because that sounds like something interesting to me. So is there anything else you're up to, Jangle? I know we talked about some tax stuff that I sort of hinted at with people on one of our calls. Wondered if you want to talk about that at all.
Yeah, sure. So I've been taking some clients for, really the October 15th is a big deadline in the US for filing taxes on any years that you filed on the previous year that you filed an extension for. So if you didn't file in April of this year for 2023, you've got until October 15th to file. I've been helping people with their DeFi tax reconciliation for that. So depending on how many transactions you have and how many years you need to file, I can basically go in there and reconcile all the transactions together to make sure that you have the appropriate cost basis, and make sure you can save the most amount of money on your tax filings, so you're not overpaying on any DeFi transactions. Like Kelly, I know you know all about it. There's a lot of softwares out there. None of them are perfect. Some are bad, some are okay, but none of them like just do it all, especially if you're doing a ton of different stuff. I know we mentioned the Trader Joe concentrated liquidity. That specific protocol is like every transaction you do is like 100 transactions in the tax softwares typically. So yeah, basically I go in and I have basically developed a system to like speed it up, make it easier, make sure that you have all your cost bases, so you're not paying, a $10,000 gain on something where you have a $10,000 cost basis and a $0 gain, that sort of stuff. And yeah, it's pretty busy between now and October 15th. But if you reach out, you can ping me like defijangle@gmail.com. You can send an email there, and I can help you out with the DeFi tax reconciliation.
Nice. Are you still looking at turning that into a business with other people, making it a big venture, or just kind of feeling it out right now?
Yeah, right now I have one other person helping me with it, and I think it's kind of a cyclical business. So right now it's pretty busy, and I'll see kind of how busy it continues to be like after October 15th. But yeah, I mean,
do you guys have do you have a website or anything to advertise your service?
Let's see. We do have a landing page. I'll tell you what. I don't think. Let me see if I can find the. It's like I deployed it on like not a normal URL. Right now, I'll tell you what. I'll put my Calendly link in the chat, and well, actually, I won't do that because it's going to go public, right? I don't want to get blown up.
Well, I don't have to put everything that's in the chat in the description of the YouTube video. I can edit that part out. I'll just make sure don't share Jangle's Calendly link.
Okay, it's also actually in my Substacks, but just shoot me an email, defijangle@gmail.com. If you need any help, just say, I need help with taxes, and you can just leave it at that, and I'll follow up with you and help you figure it out. Yeah, plan is to grow it. It's pretty busy. It's a huge problem that a lot of people have.
Huge.
I've dealt with the problem a lot. I've built some proprietary tools to speed it up and make it easier. And yeah, I'm sure, that a lot of people need help with this. So I'll keep doing it, especially if I can train people to use some of the tools I've built and do it efficiently. I think it makes a lot of sense. So yeah, reach out, defijangle@gmail.com. And yeah, I'll get a landing page soon. Really, and I think in the world of business, like if you solve a problem, like you don't really need a landing page.
Yeah, that's true. People, you'll get connected, and I'm half expecting to get a phone call or an email from Jangle one of these days saying, "Hey, Kelly, you want to come do some reconciliation work for us online?"
Yeah, yeah.
I still haven't decided how I might answer that email that hasn't happened yet. Yeah, I know
it's
enough
not the
about
most
it to know how hard it is. Sorry, didn't mean to interrupt you there, Jangle.
No, you're right. It's I wouldn't say like it's hard. It's just really like miserable, especially if you haven't done it a lot and you don't know like what you're looking at. I think there's a really steep learning curve. So
yeah, the hard part is garbage in, garbage out. The hard part is what you get from the client in the first place.
Yeah. Yeah. So yeah, as you're doing DeFi, like it really helps to keep track, like in any way that you can, like even if you are just keeping a spreadsheet or you're keeping notes on transactions so that if somebody like me's going in and saying, okay, what is the nature of this transaction? You can look at it. And then, yeah, just like making sure that you have a list of all your wallet addresses, which is important for a lot of reasons. Like, what if you kick the bucket and your family needs to get your crypto? Like, you should probably have a record of like where it all is and like what addresses it's on.
That's
so just like
that's another service you could provide is helping. And because I know some companies have done this in the past, is helping people transition their wealth from generation to generation who have their wealth in crypto.
Yeah. Yeah, for sure. And not only that, but like a lot of people, including me, most of my, tax filing years in DeFi, like a lot of people look at the year, if it's 2024, you look at 2023 when it's February of 2024, or maybe January if you're responsible and you're thinking, okay, what happened? But it kind of pays to be able to understand, okay, these are all of my assets. Like these are all of their cost basis. Like if I do this trade, this is going to be the tax, liability that I realize by doing this, right? And that sort of in the middle of the year for that tax year, as you're making that decision, that's super useful. And then like at the end of the year, you can look and say, hey, are there any positions where I'm underwater on and can sell to reduce the amount of tax that I'm about to have to pay in a few months. So there's a lot of strategies that, just especially when the markets are up, you want to be paying attention to. And then, yeah, but right now I think a lot of people are struggling with, okay, I have to file a report in the next month and a half. So that's kind of what my main focus has been. But yeah, after October 15th, I'm sure that'll shift more towards like how do you get ahead of the problem sort of thing.
100%. So they can just reach out to you. They got the email is in the chat, and I'll not put your email in the description of the YouTube video. Anything personal I will not include. But I think we should start winding down now. This was meant to be a 2-hour call. We've actually had a lot to say for 2 hours. That's amazing.
Yeah, it's crazy. When I saw 2 hours, I was like, oh man, it's a lot of responsibility.
You'll never last 2 hours. We could talk crypto all day. Are you kidding? This group, I mean, we are the OGs in crypto. Yeah, 4 hours we've done. I'm sure, Susan, you could easily talk for 4 hours, I'm sure, about what you know, not just about crypto, but investments in general, which someday, I'll just put a plug right now. Someday I would like to invite Miss Susan to come and talk to us about investing in general. We'll have you on as a special guest. You're always here anyway, but you could have the floor and do your own presentation if you're interested. So with that, does anybody have any final questions, final thoughts? Jangle, would you like to say anything before we close the call?
I'll keep an eye out for any questions in the chat. Any final questions? I guess my parting thoughts are in just highlighting the evolution of my philosophy over time. Like, Bitcoin has at least for the time being proven to be somewhat of a special snowflake with relative outperformance over the last couple of years compared to the rest of the market, because it is recognized as an asset that derives its value not from cash flows, but like gold, it's a non-productive asset that people hold purely for store of value. I think that other assets do benefit from that. Other L1 assets do benefit from that. Like ETH benefits from that, and Solana benefits from that. Even XRP to some extent, benefits from that. But I don't think that you can bet on that, forever. And I really don't think it's a good risk reward to bet on that, over the long term. So just like I was speaking earlier of, in 2001, the people who did the best were the people who focused on businesses that were building good products with good product market fit, and that were, had good management teams and were generating cash. And if you can find those businesses that are able to consistently grow quarter over quarter, year over year, especially if they're able to, sustain or grow in down years where, crypto is very reflexive, if they're able to, capture value and, reinvest capital into new initiatives and build useful things that have product market fit and generate real fundamental value, then, those are the things to focus on, in my opinion, right? I think more and more we'll see a fundamentals driven investment approach, a more traditional investment approach, and less reliance on the cyclical nature of the industry and big liquidity events, and really what boils down to the greater fool theory, as they call it in TradFi. So yeah, I encourage everybody to try to develop some methodologies for coming to valuations that are not that are intrinsic valuations and not reliant on just looking at comparable assets and saying, well, this is this big and so this could be this big, or I think a lot of people are going to be talking about this in a month, and and start to look at sort of fundamentals and intrinsic valuation, and I think that's going to be the way to move forward.
We will be exploring those topics in our advanced deep dive calls, I'll call it, because I have plans for talking just about that thing, and the framework that I'm working on will be a good starting place. And then we can modify the framework based on some of the things you've just shared today, Jangle. And I want to say, as we're closing here, I have several more questions I would love to ask you that have come up during this call, and I've held myself back. And I'm wondering if you would be interested in talking with us, on some kind of a regular basis. I don't know if it's once a year, every 6 months, or something like that, and share your thoughts. It's because I know you do your DeFi report, your Jangle report, I'm going to keep calling it. But I don't know if you have other avenues where you get to actually talk to people like this and share your ideas and thoughts. And if you're interested, I'd be interested in having you.
Yeah, I mean, we can definitely talk offline and figure out, if there's a good cadence. I'll say that, it is very early, for me to jump on a call. So probably not too terribly frequently, but yeah, I think that the video and Q&A, open sort of like live format is something that I do like. So yeah, I'm definitely open to coming back on, and Continue writing on Substack, and I'm sure in the coming months there'll be some video or some live stream content I'll put out as well. So.
Oh, nice. Well, if we do this again, I'm more than happy to bump it up at least another hour, 5 o'clock my time, 8 o'clock Eastern time, because I do my Money Monday webinars at 5 p.m. Pacific time. So it wouldn't be too big a stretch to bump this up another hour and give you another hour's sleep if you were interested in doing this again.
Cool.
Yeah,
cool. Yeah, we can talk offline.
Go ahead. Go ahead, Thomas.
I was just going to say we'd stay up for Jangle.
We'll stay up. Thomas is it would be 8 o'clock his time. And as long as his wife didn't give him too hard a time, I know Thomas would want to hear.
Oh, mercy.
Yeah, we can make an evening out of it.
Yeah.
Yep.
You'll be having breakfast. Jangle will have breakfast. Thomas will be eating dinner, and I'll be thinking about dinner at that time.
Yeah. It'll be mimosas. It'll be mimosas for me.
There you go. There you go. Well, we'll talk offline again, Jangle. I so appreciate you coming and sharing your wisdom, your thoughts. We have a lot to digest in this call, and I will be recording this, maybe clean it up a little bit, and I will get some chapters added to it and upload it to YouTube. I'll share the link in Signal. I'll also share the link in the MasterMind. And if you guys, any of you, I've said this before, I'm just going to keep saying it. If you know of people who are thinking about getting into crypto or are in it, but are, a little bit lost because crypto is getting more and more complicated, not necessarily complicated, but complex, just like the TradFi world is complex. We do have a great mastermind and a knowledge center that can help catch people up and help them figure out how to make money, because it's still very possible in crypto.
Yeah, and I just want to add, a lot of, I know we've been on here for a while, so we've kind of dwindled down to some of the hardcore fans here. But a lot of people on this call and this community and the Signal chat and everything I've worked with for a while, or I've known for a while, and we've seen some of the crypto ups and downs together. So it's really great to be back and talking to everybody here, and this means a lot to see everybody again. So, and
there were several people that wanted to be here that said they couldn't be here live, so they texted me and let me know, and so they'll definitely be saying hi to you through the replays. They couldn't be here live with you.
Well, we'll have to do it again and have another big kumbaya, because it's really a great time. I enjoy seeing everybody.
Same here. Same here. Well, thank you so much, everyone. I think with that, we'll say goodnight. And Jangle, enjoy your trip to this crazy island place. I can't wait to learn more about that once you get there and once you get back. And we're going to keep our eye out on what's going on with Solana, which apparently Jangle has migrated from ETH Maxi to Solana Maxi.
Oh no, I don't want that label. I don't want that label. I'm not a fair weather fan. I'm not a Fairweather fan. I'm not an ETH Fairweather fan, but yes.
He's not an ETH. Okay, so he's both on ETH Maxi and he's becoming a Solana Maxi too. How's that?
I'm in it for the tech. I'm a tech Maxi. I'm in it for the tech.
All right, cool. Well, we're going to learn more about that over time. Thank you so much, you guys. We'll see you on the next call.
Thanks, Jangle. Bye.
Bye.